What's up, guys? Welcome back to this trade recap. I've been doing a lot of research lately trying to get better at trading. I basically have determined that I don't really need to learn anything new anymore. I just really need to get better at reading the market and understanding like what the market's gonna do on a day to day. Basically finding out the daily bias, if you will. And kind of, dialing in on my entries and dialing in on my logic and how I should be looking at the market and stuff like that. So with that being said, we're just gonna do this trade recap because this trade was actually really good. And I think I could have I did it was basically it ended up being a 1-to-1, but I found that it actually could have been a 1-to-2 or even a 1-to-6. So because I think the old me, like the me from yesterday, would have normally not taken a trade like this, but I think because of my newfound logic, I decided to take this trade, which actually did happen to work out, and like understanding when I should be in a trade and things of that sort. So with that being said, looking at the daily chart, I realized I was basically coming in with a bearish bias. Initially, I was bullish, because this candle had closed back within this range here, and this candle had no wick. But then I had to look at it like, okay, well, ES is showing bearishness, like clear bearishness, right? Because this candle basically took out this high and closed back with below. And then I was looking at it again and I was like, oh, okay, wait, technically this candle closed back within the range, right? It opened, it didn't even make a high and then closed back in the range, and we're really close to this fair value gap here on both assets. So I was like, okay, bearish. I'm going in with a bearish bias essentially, right? So I marked out this fair value gap and I marked out this fair value gap. So for both assets, this was ultimately the draw I marked out. So that was the draw on liquidity for the daily chart. And then I went down to the 4 hour, and then I essentially, when we opened, we were still up here, right? So this candle hadn't printed yet. This candle hadn't printed yet. But just to give you some context, this is that fair value gap. This is that fair value gap. So we're still relatively close. So I was ideally looking to take this trade on ES just because ES was the closest one to the draw. I'm not sure if that was necessarily a correct way of thinking, or maybe I should have taken the one that was the strongest or fastest. Not quite sure. I did recognize that ES had more draws on liquidity to target than ES. But with that being said, I was like, okay, we have clear draws on liquidity below us, so I'm definitely bearish. I tried to seeing if we had any SMTs above us. We did not have any at the time of opening. And then another thing that I looked at was basically I marked out my 800, my 1800 candle, my 600 candle, as you can see here and here. I recognize that the high of the day wasn't really created by anything, and we didn't really have a significant low of day as well. And remember that because that's actually gonna come. That's gonna be actually very important for why I decided to take the trade that I did, right? So with that being said, let's go down to the 1 hour. On the 1 hour, you kind of just get to a little bit more understanding of that daily profile. So again, I was looking at whether we created any significant high of day. I didn't really see one. On one hand, we did still respect this fair value gap, and we did have a change in state. So I mean, in that regard, I guess you could say we did create a relevant high of day, but yeah, maybe we did create a relevant high. Technically, we wouldn't have one price to come back up to this, but I guess in a way it wasn't really that significant. So, we did take out Asia highs, right? So, anyways, let's just go down to the 15 perhaps, 15-minute perhaps. I don't really think there's anything of relevance here necessarily. So, anyways, going on a 3 minute, I was looking for we were like below here when we opened at 3:30 ish, right? So we were like under here, so I was like, oh, cool. So we're closing down here, and but the thing is, because it was only 9:30, I had to see a little bit more before I did anything. I can't just like go in the trade exactly at 9:30 just because I see that we have a change in state of delivery, right? And technically, these are not even real changes in the state of delivery because they're not consecutive up close candles. Maybe this one is, but because it was just 9:30, I can't enter here. And not only that, I guess these are also relatively equal highs. This is a failure swing, and typically at 9:30 you want to see some form of how do I put this swing point created, right? You want to create you like at first when I opened it, started going up, I was like, okay, that's fine because we're probably going to create a swing point and then maybe come back down and get another change in state of delivery. However, we started barreling up, and I was like, oh crap, we're going up. But I wasn't really expecting bullish price action. So I was like, and not only that, we didn't even get a relevant retracement here. And then we got up here, and I was like, okay, we could take a trade up from here. But the only thing is that we've already expanded a lot, and I'm kind of hesitant to take a trade all the way up here. But one thing that I did notice is that we did take out Asia highs, right? And I guess at the time I was thinking that we didn't really create a relevant high. We didn't really have a relevant high of day put in. Although I think technically we did have a relevant high put in, but it's whatever. At the time I was thinking that we didn't. So coming into like the 10 o'clock, I was like, okay, I was thinking maybe we would close above here. Maybe I'll try and long it. But we actually got another breakdown where we had a change in state of delivery right here. And it happened on both ES and NASDAQ. So we had both, they were both moving to the downside. And I was like, you know what, I'm just going to take this trade. And then I marked out standard deviation because we had a swing point. So that's really good. Typically, if you have a swing point that you can anchor your fib to, it's a good sign. If you don't have an anchor to mark out your fib, then probably not a good sign. And we're probably, price has not really determined where it wants to go yet. But because I had this fib marked out, I was like, okay, I'm going to take this trade. And initially, I actually just went for 1-to-1. And I basically just went for $500. So that's actually what I went for. Even though standard deviation was saying, hey, we could get down here, I was like, I'm just going to play it safe. And I just went for 1-for-1. But realistically speaking, I could have went for that 1-to-2 here, or even marked out this actual low here. If you're going to use standard deviation, just keep in mind that you shouldn't really adhere 100% to standard deviation. Standard deviation is there to help you. So typically you want to target real actual lows, and not rely. I do think if you're in a situation where there's nothing to the left of you to target, then you can definitely just use standard deviation as is. But when you have realistic targets like to the left of you, then you kind of just want to use standard deviation as a guide, but you typically want to adhere to what the real targets are, which was this low marked out here, and it did end up hitting it. I will say the better target, the better R&R that was given was definitely NASDAQ. The only issue with NASDAQ is that, okay, actually no. The only reason I took it on ES was because ES was the one that was closest to the target. So that's why I took it on ES. But NASDAQ would have definitely given you like better R&R, which is a shame because it hit all my targets that I marked out, and it would have given you a 1-to-6, which is absolutely insane. Let's look what this would have been if I risked 1%. That would have been $500 to make $3,000, which is amazing. So yeah, I'm actually really proud of this trade. I literally just sat down, and the first trade I took happened to work out. But I think the biggest thing to understand is I think the biggest thing that that's helped my trading as of recently. This is a new session, by the way, and you can see that my win rate right now is 66%, which is amazing. I'm up 7% on the month, and some of the key changes that I made to my trading, really, which I hope that continue to yield very good results, is basically just being able to determine a bias from the daily chart more accurately, and having a better reading on the daily chart. Two, honing in a lot more on the 4-hour chart as well, understanding your SMTs, whether we put in a relevant high or low of day, and yeah, basically that's just it. Understanding our confluences that are maybe supporting our daily bias or maybe are invalidating our daily bias. And another thing is just getting better on my entries. Entering when there's a change in state of delivery, or we've closed above a order block or closed below an order block, and entering there, especially with my stop placement. But I think one of the biggest things that's made a lot of difference in my trading is just understanding, not even understanding, but using a standard deviation. I think standard deviation helps a lot with my timing, understanding what should happen around the drivers. So your drivers are your equities open, your 8:30 news, your 10 o'clock candle, things of that sort, right? The key times of day where price should do what you're expecting it to do, essentially. So those are just some of like the biggest things I've learned. Um, what else? And then I think a new key thing that I've brought into my trading is understanding like when the high or low of day has been put in. And this I think takes a little bit of practice. I'm not really good at this just yet, but understanding that, what can happen based on what you're seeing in the charts. So like maybe if we've made the low of day, maybe there's an SMT, maybe we've had a change in state of delivery, and that could indicate the low of day. Maybe we went all the way back up to the opening price of the day and we're trading back into the range, which is actually what happened with the trade that I just did a trade recap for. We basically went back up to the opening of the day. We took Asia high, and then we came back into the range, which is when I got that bear setup that I was looking for from the very beginning, essentially, right? Um, and yeah, and then I think another thing is understanding like when not to trade. I think that's the biggest thing because like I had another session where I was basically taking a trade every single day of the month. And I was like, my old strategy, I wasn't taking trades so often, and I was basically having a really good not risk to reward, but a win rate. I had like at least a 50% win rate. I was taking less trades a month, and I was actually making like pretty good R&R or money on the month. And I kind of wanted to like go back to that where I'm not necessarily taking trades every single day. I wanted to be a little bit more selective with the trades that I'm taking. So understanding when not to take a trade is just as important as knowing when to take a trade, I think. And I another thing that I've also, there's so many things, but like another thing is just like if I'm using standard deviation, sometimes it's best to take partials because those partials can be the difference between a winner and a loser or breaking even. And I do think sometimes like, for example, I broke even here, right? But if I had taken partials, these would have been winners. They would have been complete winners, but they would have been partial winners. And, you know, these are definitely break even because the trade didn't hit my ultimate target. But I'm pretty sure it hit standard deviation 1 at least, right? So if I taken something off, I at least would have came out with a win. And this will make you have a higher win rate, that's for sure. But the thing is, I definitely want to trade in a way where my targets are being hit, I think. So yeah, it's a lot to still figure out, and there's just a lot of tools in my art in my toolbox that I can use, and it's knowing when to use what, but at the same time knowing what fundamental things you need to have in a trade setup and the logic that needs to be there for you to even take a trade or not take a trade. And I think that's the most like difficult thing to learn when you're trading. But with that being said, that's basically everything. I do think this is a very pivotal point in my trading, and I just hope I continue to get better from here. Slowly but surely, I am starting to see 6% plus a little bit more consistently. Still not as consistently as I would like, but I'm definitely starting to see it a little bit more. Um, so, yeah, that's all I have to say here. I hope you learned something. If you want me to cover anything, let me know. With that being said, don't forget to like and subscribe, and I will see you in the next one. Peace.